In the annals of private enterprise, few companies have reached the astronomical valuations now claimed by Elon Musk's SpaceX. Reports from early 2024 confirm a staggering private market valuation exceeding $180 billion, positioning it as the world's most valuable privately held company. This figure not only underscores an extraordinary journey from ambitious startup to aerospace titan, but it also casts a long shadow over the conventional metrics of corporate worth, sparking intense speculation across global financial markets regarding its inevitable public debut. The question isn't if, but when, and what form this monumental event will take. To fully grasp the scale of SpaceX's private valuation, consider its standing against established industry giants. At over $180 billion, SpaceX now surpasses the combined market capitalization of aerospace mainstays like Boeing, valued around $120 billion, and Lockheed Martin, hovering at $115 billion. This comparison, as reported by financial analysts, reveals an unprecedented shift in investor confidence towards future-oriented space technology over traditional defense contractors. It signifies a profound re-evaluation of what constitutes a blue-chip investment in the 21st century, prioritizing innovation and disruptive potential over decades of legacy operations. Further emphasizing its unique position, SpaceX's current valuation nearly doubles the peak valuation of social media giant Meta, then Facebook, prior to its landmark 2012 IPO. At that time, Facebook's pre-IPO valuation was approximately $100 billion. This historical comparison, cited by various financial publications, highlights SpaceX's extraordinary growth trajectory in a remarkably shorter private market lifespan. It suggests that the market now places an even higher premium on ambitious, capital-intensive ventures with long-term, transformative visions than it did on the social networking boom of a decade ago, setting new benchmarks for public offerings. What fuels such an immense valuation? Financial reports indicate SpaceX's revenue reached approximately $9 billion in 2023. This substantial income stream is largely diversified across two primary business units: its rapidly expanding Starlink satellite internet service and its dominant launch services, primarily driven by the Falcon rocket series. Analysts project this revenue could climb to an impressive $15 billion in 2024, reflecting accelerating demand and operational scaling. This growth trajectory is critical for justifying its private market price tag and will be a cornerstone of any future public offering prospectus, demonstrating clear commercial viability. The Starlink division stands as a significant driver of SpaceX's commercial success and, consequently, its valuation. As of late 2023, Starlink reported over 2.6 million subscribers globally, a testament to its widespread adoption in areas underserved by traditional internet infrastructure. This impressive subscriber base translates into recurring revenue, a highly attractive metric for investors looking for predictable cash flows. The global expansion of Starlink not only broadens SpaceX's market footprint but also positions it as a critical piece of global communication infrastructure, generating consistent income that can fund further ambitious space endeavors. SpaceX's journey to its current valuation has been supported by substantial private capital. Since its inception, the company has raised over $12 billion across more than 30 distinct funding rounds. This persistent capital injection, as documented in financial disclosures, speaks to both the capital-intensive nature of space exploration and the unwavering confidence of a diverse investor base. Such a vast sum, accumulated over years, has been essential for funding ambitious projects like Starship development and the massive Starlink constellation, demonstrating a long-term commitment from its backers despite the inherent risks of aerospace innovation. A look at SpaceX's investor roster reveals some of the most influential names in technology and finance, underscoring the strategic importance of its mission. Alphabet, parent company of Google, has been a notable early investor, alongside financial heavyweights like Fidelity Investments and Sequoia Capital. These cornerstone investors, as detailed in various funding reports, often bring not just capital but also strategic expertise and market validation, further bolstering SpaceX's credibility and long-term prospects. Their continued commitment through multiple funding rounds signals a deep belief in the company's vision and its potential to redefine both space exploration and global connectivity. While SpaceX remains privately held, its shares are actively traded on a robust secondary market, offering a glimpse into real-time investor sentiment and potential IPO valuation. Transactions on these private exchanges, as reported by financial desks, have seen shares change hands at prices implying valuations as high as $200 billion. This premium on the secondary market suggests an even greater investor appetite than official funding rounds reflect, with buyers willing to pay above the last recorded valuation for early access. Such activity is often a strong precursor to an IPO, indicating deep demand from institutional and accredited investors. The extraordinary private market growth of SpaceX has directly led to significant wealth creation for its long-term employees. Many early and senior staff hold substantial stock options, with some individual stakes now valued in the tens of millions of dollars. This internal wealth distribution, a common feature of successful startups, serves as a powerful incentive and reward for dedication to a high-risk, high-reward venture. For these employees, a future IPO represents the ultimate liquidity event, transforming years of hard work and belief into tangible financial security, making them key beneficiaries of this potential wealth transfer. Despite the fervent speculation, CEO Elon Musk has consistently tempered expectations regarding a full SpaceX IPO. He has stated, "I'm not sure when that will be, but it will be quite a ways in the future." This perspective, frequently reiterated in interviews and public statements, underscores a preference for remaining private while the company focuses on its ambitious, long-term engineering and exploration goals, particularly the development of Starship. Musk's cautious stance suggests that a public offering will only occur once the company's core technological and operational challenges are more fully resolved and its financial outlook is unequivocally stable, prioritizing mission over immediate market demands. While a full SpaceX IPO remains distant, Musk has indicated a different trajectory for its Starlink division. He has stated that Starlink will likely be spun off for an IPO once its cash flow becomes predictable. This strategy suggests a pragmatic approach to funding Starlink's massive constellation build-out and operational scaling, using public capital for a more mature, revenue-generating segment. A Starlink-only IPO could test market appetite for space-based internet services, provide liquidity for existing investors, and generate capital without subjecting the more speculative Starship development to public market scrutiny. This split approach highlights differing maturation stages within SpaceX's diverse portfolio. The anticipation of a SpaceX IPO has ignited a fierce competition among the world's leading investment banks. Wall Street institutions are aggressively pursuing mandates, vying for the prestigious and highly lucrative role of leading the public offering. This includes offering significant pre-IPO financing packages and advisory services to major shareholders and employees looking for early liquidity. The race for these mandates highlights the perceived immense value and prestige associated with managing such a monumental IPO, which could redefine careers and bank standings within the competitive financial industry, securing significant fees and future business from the next generation of space mobiles. Securing a SpaceX IPO mandate is not merely about immediate fees, it's a strategic long-term play for influence and future business. The bank that leads this offering will gain unparalleled access to the next generation of space technology companies and the emerging space economy. This positions them at the forefront of a rapidly evolving sector, attracting further deals and talent. Analysts suggest that the chosen lead underwriter will likely become the go-to bank for future space-related ventures, cementing their reputation as a leader in a high-growth, high-profile industry for decades to come, extending their reach far beyond just this one transaction. Despite its meteoric rise, SpaceX faces significant regulatory hurdles, particularly concerning its Starlink division. These include complex challenges related to satellite deployments, securing sufficient spectrum allocation, and navigating international market access for its global internet service. Each country presents its own set of rules and requirements, and geopolitical considerations often play a role. These regulatory complexities, as highlighted by industry experts, could impact Starlink's expansion speed and profitability, posing a notable risk for potential investors and complicating the timing and valuation of any future public offering for either Starlink or SpaceX as a whole. SpaceX's dominance, particularly in launch services and satellite internet, is increasingly being challenged by a burgeoning competitive landscape. In the launch sector, rivals such as Jeff Bezos's Blue Origin and New Zealand-based Rocket Lab are developing new rockets and services, aiming to capture market share. Meanwhile, Amazon's ambitious Project Kuiper is rapidly advancing its own satellite internet constellation, directly challenging Starlink. This intensifying competition, observed by industry analysts, could pressure SpaceX's pricing power and market share, adding a layer of risk for future growth projections and impacting investor sentiment ahead of a potential IPO. The full development and scaling of Starship operations, SpaceX's ambitious interplanetary transport system, still requires significant capital. Estimates from aerospace engineers suggest that each Starship launch and test alone costs tens of millions of dollars. This ongoing, massive investment, while critical for achieving Elon Musk's long-term vision of Mars colonization, represents a substantial drain on the company's cash flow in the near to medium term. Public investors will scrutinize these capital demands, weighing the long-term potential against the immediate financial commitments, which could influence the IPO valuation and the company's financial structure post-listing. Despite these challenges, some analysts maintain an extraordinarily bullish outlook. Morgan Stanley, specifically lead analyst Adam Jonas, has posited a bull case valuation for SpaceX as high as $1 trillion by 2040. This optimistic projection, widely reported in financial media, is primarily driven by Starship's potential to revolutionize space colonization and interplanetary transport, opening entirely new economic frontiers. It reflects a belief in SpaceX's ability to create entirely new markets rather than just capture existing ones, viewing the company as a foundational platform for a future space-based civilization, moving beyond terrestrial limitations. Conversely, Morgan Stanley's base case valuation for SpaceX presents a more conservative, near-term outlook, ranging from $200 billion to $300 billion. This range, while still substantial, reflects a more immediate assessment of current revenue streams, Starlink's growth, and the ongoing costs and risks associated with Starship development. It acknowledges the company's current strengths but tempers expectations with practical considerations of market conditions, regulatory environments, and competitive pressures. Both the bull and base cases, as disseminated in their research notes, offer investors a spectrum of possibilities, highlighting the inherent uncertainty and vast potential within SpaceX's long-term vision, even from the same analytical perspective. Beyond institutional interest, a significant wave of retail investor enthusiasm is poised to meet a potential SpaceX IPO. A recent survey by a major brokerage firm indicated that over 70% of retail investors would consider investing in a SpaceX IPO within the first year of its public offering. This widespread public demand, unparalleled for many traditional IPOs, suggests that the Elon Musk effect, combined with the allure of space exploration, creates a powerful draw. This retail fervor could ensure a robust initial valuation and strong aftermarket performance, making it one of the most anticipated public listings in recent memory. An IPO of SpaceX's scale could have profound implications for the entire aerospace and defense sector. Financial analysts predict it could trigger a significant re-rating across the industry, potentially shifting investor capital from traditional aerospace companies to innovative spacetech pioneers. This seismic shift would force established players to accelerate their own innovation efforts or risk being left behind in a market increasingly valuing disruption over incremental improvements. The success of a SpaceX IPO could signal a new era where space capabilities, rather than legacy defense contracts, define the leaders of the global aerospace industry, fundamentally altering investment strategies. Beyond financial markets, a SpaceX IPO could significantly influence global regulatory frameworks for space commerce. The scale of Starlink's deployments and Starship's ambitions necessitates new international agreements and policies regarding orbital traffic, spectrum use, and lunar/Mars resources. A publicly traded SpaceX would intensify scrutiny on these nascent regulatory discussions, potentially accelerating their formation as governments and international bodies seek to accommodate and govern this new space economy. Its market power would give it considerable sway in shaping the rules of the road for future space operations, impacting all other players. The intense pursuit of early access to SpaceX shares highlights a core aspect of this impending wealth transfer: the premium placed on pre-IPO investment. Private equity funds, hedge funds, and high-net-worth individuals are actively seeking opportunities to buy into SpaceX via secondary markets or private placements. This quest for early entry, before public listing, aims to capture the potentially explosive growth typically seen in the initial phases of a highly anticipated IPO. For these investors, gaining a foothold now could mean exponential returns when the company eventually goes public, converting private illiquidity into massive public wealth, a classic mechanism of financial transfers. Looking at historical precedents, the run-up to a SpaceX IPO mirrors the immense excitement and wealth generated by the public offerings of tech behemoths like Google and Facebook. Early investors in these companies reaped unprecedented returns, transforming modest initial stakes into billions. While the sectors differ, the pattern of a disruptive company reaching a colossal private valuation, attracting a frenzy of secondary market activity, and creating vast wealth for founders, employees, and early backers is strikingly similar. SpaceX's scale, however, suggests an even larger potential wealth transfer, given its multi-trillion-dollar market potential as envisioned by some analysts. A critical challenge for SpaceX, when it eventually decides to go public, will be managing sky-high investor expectations. With a private valuation already exceeding $180 billion and some analysts predicting a $1 trillion future, the company will need to clearly articulate its growth strategy, profitability roadmap, and risk factors to public shareholders. The transition from a privately controlled, mission-driven entity to a publicly accountable corporation demands transparency and a consistent narrative. Failing to align market expectations with operational realities could lead to volatility, a concern highlighted by past high-profile tech IPOs that saw initial surges followed by corrections. SpaceX's ambitions are inherently long-term, spanning decades of technological development and exploration. This long-game approach, while appealing to visionary investors, often clashes with the quarterly reporting cycles and short-term pressures of public markets. Elon Musk's previous statements about staying private for the foreseeable future reflect this tension. For a company focused on fundamentally reshaping humanity's presence in space, the immediate demands of public shareholders to demonstrate profitability and growth can be a significant constraint. The IPO timing will therefore be a delicate balance between needing capital and maintaining strategic autonomy. Beyond financial and regulatory risks, SpaceX faces significant technical hurdles inherent in its ambitious endeavors. The successful, repeatable launch and landing of Starship, the deployment and maintenance of the vast Starlink constellation, and the continuous innovation required to stay ahead of competitors all pose complex engineering challenges. Any major technical setback, such as a Starship failure or a widespread Starlink service interruption, could significantly impact investor confidence and the company's valuation. These technical risks, acknowledged by industry insiders, are often more difficult to quantify than market risks but are equally critical for a company pushing the boundaries of technology. For ethical investors, a SpaceX IPO might present a unique dilemma. While the company champions groundbreaking innovation and expands human reach, its close ties to defense contracts via national security launches and the environmental impact of large-scale rocket launches and satellite deployment could raise concerns. Balancing the promise of technological advancement with environmental stewardship and the broader societal implications of space commercialization will be a consideration for socially conscious funds and individuals. This dual nature of innovation and potential impact demands careful scrutiny from those weighing their investment decisions against ethical frameworks. SpaceX's unparalleled success has undoubtedly intensified a new global space race, not just among nations but increasingly among private enterprises. The company's innovations have spurred massive investments in competing technologies from both established aerospace firms and new startups worldwide. This competitive pressure means that while SpaceX has a significant lead, it must continuously innovate and execute flawlessly to maintain its position. The IPO, when it comes, will not just be about one company's public debut, but a bellwether for the entire, rapidly expanding private space industry, setting precedents for future space ventures globally. The long-term vision of SpaceX hinges significantly on the success of Starship, which is not merely a rocket but envisioned as a foundational platform for an entire space ecosystem. This includes everything from lunar bases and Mars colonies to orbital refueling depots and point-to-point terrestrial transport. As outlined by Elon Musk, this vision, if realized, would create a new economic sphere worth trillions, dwarfing current aerospace markets. The capital required to build this ecosystem, and the potential returns, are unparalleled, which is why Starship's progress is a major factor in both the bull case valuations and the strategic timing of any IPO. Deciphering Elon Musk's true motives for IPO timing is a constant challenge for analysts. His public statements often blend ambitious vision with practical constraints. While he speaks of Starlink's predictable cash flow as a trigger for its IPO, the overarching goal for Starship and Mars colonization suggests a desire to raise capital without sacrificing the long-term, high-risk development necessary for these endeavors. It's a strategic dance between leveraging public markets for growth and protecting the company's moonshot projects from short-term financial pressures. Investors must weigh his stated goals against market realities and the immense capital still required. The journey of SpaceX's valuation, from its early funding rounds to its current $180 billion and even $200 billion implied secondary market price, illustrates a classic pre-IPO valuation cycle. Early investors took on significant risk for substantial equity, seeing their stakes multiply many times over. Each subsequent funding round, fueled by increasing success and market excitement, progressively raised the company's value, creating a virtuous cycle for those already invested. This cycle, a cornerstone of venture capital, is precisely what underpins the biggest wealth transfer narrative, concentrating significant gains in the hands of a select few before public trading. A significant risk for a highly anticipated IPO like SpaceX's is overvaluation. The immense hype, coupled with the fear of missing out, FOMO, among both institutional and retail investors, could drive initial share prices to unsustainable levels. Historically, many high-profile tech IPOs have experienced initial spikes followed by sharp corrections as market realities set in. Investors will need to critically assess whether the projected growth and profitability can truly justify a valuation that already dwarfs many established corporations, rather than simply being swept up in the narrative of space exploration and Elon Musk's vision. The global impact of a SpaceX IPO extends into geopolitical realms. As Starlink expands, it provides critical internet access, including in conflict zones, potentially giving the US and its allies a strategic advantage. Conversely, this reliance on a single private company raises questions about national sovereignty, data security, and the weaponization of space. A public listing would expose SpaceX to even greater international scrutiny, with governments worldwide watching how a US-based, publicly traded entity influences global communication and space access. The financial market decision thus intertwines deeply with international relations and defense strategy. The impending SpaceX IPO symbolizes a fundamental shift in global capital allocation. Billions of dollars, traditionally invested in established sectors, are now poised to flow into the nascent space economy. This reallocation reflects a broader trend of investors seeking growth opportunities in disruptive technologies and new frontiers. The sheer volume of capital likely to be directed towards SpaceX and, by extension, the broader space sector, could accelerate innovation, create new industries, and redefine economic powerhouses for decades. It's not just a transfer of existing wealth, but a redirection of future investment, shaping the global economic landscape. Many financial commentators are already calling the potential SpaceX IPO the defining public offering of this generation. Its scale, its ambition, and its projected impact across multiple sectors, from telecommunications to transportation to defense, make it a singular event. It represents not just the public debut of a company, but potentially the coming out party for a new era of space commercialization and exploration. The IPO will be a pivotal moment, determining how much of this future wealth will be created and transferred, and who will ultimately benefit from humanity's accelerating push beyond Earth's confines, rewriting the rules of investment and innovation. To fully appreciate the scope of this wealth transfer, it's essential to recall SpaceX's humble beginnings. Founded in 2002 with the audacious goal of making life multiplanetary, the company faced immense skepticism and numerous failures in its early rocket development. It was a period defined by lean budgets and unwavering belief. Those initial, high-risk investments, made when the company's future was far from certain, are now poised to yield colossal returns. This trajectory from a visionary startup to a global powerhouse highlights the exponential rewards for those willing to bet big on transformative technology and endure the long, challenging journey. As institutional investors and wealth managers prepare for a SpaceX IPO, there is an observable shift in portfolio strategies towards the space sector. This isn't just about adding one stock, it's about reevaluating entire asset allocation models. Reports from major financial firms indicate a growing exodus of capital from stagnant industries into high-growth, disruptive fields like space technology. This exodus represents a proactive attempt by fund managers to position their portfolios for the next wave of economic expansion, with SpaceX at the forefront. The IPO will serve as a catalyst, accelerating this trend and further solidifying the space economy's place in mainstream investment. Even with significant retail and institutional demand, forecasting post-IPO volatility for SpaceX is challenging. The sheer size and speculative nature of some of its ventures, coupled with Elon Musk's unpredictable influence, could lead to significant price swings. Public markets are often less forgiving of long-term development cycles than private investors. Analysts will be watching for how the market reconciles SpaceX's ambitious future plans with its current financial performance and the inevitable pressure to deliver quarterly results. This inherent tension suggests that early public investors should brace for a potentially turbulent, albeit potentially rewarding, ride in the aftermath of its public debut. Beyond financial metrics, the SpaceX IPO will undoubtedly leave a lasting legacy on how future generations view investment and innovation. It will symbolize the ultimate vindication of a vision once deemed impossible, a testament to audacious engineering and entrepreneurial spirit. The wealth transfer, immense as it is, will be intertwined with the narrative of humanity's expansion into space, inspiring new ventures and attracting talent to the challenging field of aerospace. It's a story of transforming science fiction into economic reality, one rocket launch and satellite deployment at a time, fundamentally altering investment landscapes. SpaceX's private market valuation of over $180 billion has set the stage for a monumental IPO, poised to become one of the biggest wealth transfers in Wall Street history. From early employees becoming multimillionaires to institutional investors vying for mandates, the financial implications are staggering. While challenges like regulatory hurdles and competition persist, the allure of Starlink's revenue and Starship's trillion-dollar potential continues to drive unprecedented interest. This isn't just an IPO, it's the opening of a new financial frontier, rewriting entire industries and reshaping global capital flows. The world watches, waiting for the launch of this economic titan into the public market.